Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Monday, it's the 18th of December. My name is Russell Sharma, Senior Market Specialist at FXCM. My email address is rshore@fxcm.com. Just going to go ahead, bring up the disclaimers. Also, want to just let you know that this will be the last week of webinars for this year, and then we'll pick up again in January. All right, I'll just keep the high risk investment warning on. Good morning, Kim. Pleasure to have you on the webinar as always. Good morning, Raj. Hello, James. Thank you very much for signing in. I'm just going to bring up our market commentaries disclaimer. All right, and just our references, MarketScope 2.0 and TradingView.com. We'll just go through to TradingView. Here is the real rate, and it's really just sort of fallen off a cliff now, hasn't it? It's come down quite dramatically, and what we were looking at was, of course, a potential holders if it is broken the neckline. By and large, the real rate has come down quite dramatically, and take a look at the US dollar underneath that. Let's just do this, bring the US dollar underneath in a new pane. You can just see how the US dollar's come down as well. Really has declined. I think that's pretty much in line with our thinking of how the market was going to go. We got help. Where did we get the help? We got help with the dovish tone from the Fed. I thought there was going to be pushback there. There wasn't, and the real rate unfolded pretty much in terms of the technical pattern. Let's just take a look at this. Let's just take a look at this in terms of the risk markets. So instead of the US dollar, let's put in NASDAQ. So we're just putting NASDAQ there. You can see how we've kind of got that Santa rally, as they call it. It's really pushed up as the real rates come down. Let's take a look at a few of the others. Let's take a look at SPX, S&P 500. So let's just change this to SPX 500. And you can see, again, some nice movement here. And let's take a look at one more. Let's take a look at the Russell 2000. We'll use the FXCM CFD, so we'll just use US 2000 here. Just type in US 2000. So this is the smaller companies index. Okay, terrific. Nice movement, terrific up. Okay, so the end of the year rally sort of in full force. Something that is interesting now, I'm going to be very interested to see how it unfolds. Let's take off the, let's go back to just the real rate. So let's take out the US 2000. All right, so here is the real rate. It's on the daily. Let's put in the RSI. Let's put in the RSI here. Okay, so just go indicators. Okay, we've got a sold condition here, and I just wonder if maybe it's suggesting that the yield is going to bounce somewhat from here. So let's just fix this up. So what would rationale for some sort of increase in yield? I think for that we've got to take a look at the bonds themselves. So let's look at IEF just to show you. Here is the real. Okay, let's put the IEF underneath that. That is an exchange traded fund looking specifically at 7 to 10 year treasury bonds. Let's put that underneath. Okay, and you can just see it's really moved up as well. Nice move here. Let's just take a look at IEF in terms of overbought condition, and then we'll try and understand what that means for us. So let's go through to IEF. Okay, and let's put in an RSI. All right, not quite at 80, so it's interesting. So let's just take a look at the, instead of the real yield, let's take a look at the US 10-year. Let's see what that's looking like. Yeah, that is oversold as well. Okay, so let's just put this into words. What we're seeing here, we're seeing that the real yields have come down. We see that's pulled dollar down. The dollar is a safe haven, so it's pulled money out of the safe haven. Where's that money gone? It's gone into the risk side of the market. The risk side of the market is the stock market, etc. So we've seen a nice sort of lift off in terms of year end. And at the same time, we've seen a lot of money flow into just clearly undervalued bonds. You're getting a fairly good yield there, and prices are just dirt cheap at the moment. So a lot of money is just flown into bonds. But now I think the sort of easy money probably being made there. There could be some profit taking. Could be some profit taking in the bond market. If there is some profit taking in the bond market, we could see the yields move up. And if the yields move up, it may put some pressure on the risk market, the stock market, and it may just lift the US dollar somewhat. Okay, so I think this sort of easy money is being made somewhat, but now it's getting to a condition which is potentially showing maybe a correction due. Let's go through to market scope. Market scope is we're taking a look at the US dollar. We can see that the US dollar is below this 30-week exponential moving average, and we can see that the 30-week exponential moving average is pointing down. We can also see that the RSI is below 50, so dollar still has bearish tendencies, bearish momentum behind it on a longer term chart. If we go through to our daily chart, you can see here we've fallen back into zone 3. We had some sort of kind of flag here, which we pointed out last week. Something like that. Okay, then it fell out. We used our trend line to really get ahead of that, and the dollar has come down quite substantially. Again, we had help there from the FOMC. By the way, something just worth mentioning: PCE inflation, which is the Fed's preferred measure of inflation, that's coming out on Friday. So just be aware of that. Let's go through to the hourly chart. Let's see what's happening. So just before we get to the hourly, if there is some sort of movement down on the weekly, which there is, if there is some sort of movement down on the daily, which there is, then of course the resistance areas become particularly interesting when it comes to the to the hourly, and we can actually see this is interesting. So we didn't get the bounce here. It just with a small bounce, kind of got that, and it just kind of shot right down again. Okay, so let's take that out. All right, so we're getting a bearish crossover here. It looks as if the dollar is starting to push down. We're starting to see if the stochastic rolling over. So it does look as if there is dollar weakness. Just want to throw the sort of complication in. Remember that the real yield and the nominal yield are oversold. So there may be a floor. There may be a price floor underneath the US dollar. So just be aware of that. But we do have this 1, 2, 2, 3, and now it looks like it's kind of moving into the next impulse move. Just again, watch the yield just to see if that oversold condition normalizes. In my opinion, at some stage it needs to normalize. Okay, so just be aware of that. Let's just take a look at euro, because euro was interesting. I'm going through to the euro chart. As the shows signs of weakness, you can see euro is on top of the 30-week exponential moving average. That 30-week exponential moving average is turned up. The RSI is above 50. Okay, let's go through to the daily chart here, and we've just perhaps got some sort of dip in the uptrend that we can take advantage of here. Yes, it's gone back through to zone 2, but I think if there is going to be some sort of decline in dollar, then of course euro now comes back into play. And if we just take a look at this in terms of where we're at, well, crossover, and we're slowly making our way through to the upper quintile. Again, I want to just reiterate, what's the caveat here? What's the one aspect that we need to be aware of is that the real rate is in frothy territory. It's oversold. That is probably putting a price floor under the dollar. If it is, then there's probably a price ceiling on euro. So just be aware of that. Okay. That was euro. Let's take a look at cable, and then we'll take a look at gold. Let's go through the cable. All right, again, over that 30-week exponential moving average, the 30-week exponential moving average pointing up, RSI above 50. All right, we are in zone 1 here. Okay, we are in front of this downtrend line on the RSI. Here's the movement up, and now we're getting the next 1, 2, and potentially going into the next 2, 3. What we've got to see here is if there's going to be a positive cross in EMAs, and if we get the positive cross in the EMAs, then the angle and separation to the upside. Here we want to see the stochastic make its way through to the upper quintile. Again, I'm going to reiterate, I know that I'm saying this now ad nauseum, watch the oversold real rate. I think there is a price floor on the US dollar. That would imply price ceilings on euro, cable, and other majors. All right, let's take a look at gold, and then we'll end off with DAX. Let's just take a look at gold. Bring up XAU USD. All right, thanks, Raj. Appreciate it. Now, I do like this chart. I like the higher trough, higher peak. There has been a let's actually get rid of all of the. let's get rid of the studies here, because there is something interesting happening on gold, which we just need to be aware of. Okay, just be aware, last week's candle was a spin top. We kind of don't really know with any certainty which direction we're going. That's sort of spinning tops telling us there's uncertainty. So what you can do, just put a line over here. We need to see this week if there's bullishness and takes out last week's high. What's the problem? The problem is, of course, just we want to see how the dollar travels. Does it have that price? Cheers, Raj. Have a great week. Speak to you tomorrow. We wanted to see how how gold travels this week. We want to see if there is a price ceiling on the price floor on the dollar that might prevent gold from taking out last week. But we just want to see with last week's uncertainty, we want to try to get that to dissipate. So just keep an eye on the high from last week. And of course, let's just take a look at this. Given last week's spin top, we're in zone 2. It's not looking particularly strong this morning. Just going through to the hourly, and we might see the influence. We might be seeing the influence of the oversold yields here. You can see this looks actually to be rolling over. So this could be the sort of forewarning that there is an oversold real rate. Let's go through to DAX. This will be the last chart we look at this morning. And the DAX, look what's happened here. This resistance area we flagged. We flagged this resistance area, and we said just be careful if you're trading DAX. Just be careful. Okay, we're overbought. Let me say that we said we're overbought, and then come Thursday into Friday, it's really, and now we're starting to normalize again. So this normalization here, I think, is a healthy aspect to the DAX. We want to see the RSI back below 80, and at some stage we want to see if the support levels hold. So keep an eye on S1 and see if that S1 will hold. But the overbought condition here came into play, and we warned about that. We were saying, like, be careful. I'm not sure how much higher it can go. So we've got this resistance area in. I'm going to just keep it. Do I want to keep it? Yeah, let's keep it as is. Let's see how we evolve price-wise, given this resistance, given that this overbought condition seems to be in the midst of some sort of correction. Given the fact that the real rate looks as if it's going to lift, if the real rate lifts, well, then we may see the DAX fall back into zone 2. How sharply can the real rate turn? I don't know the answer to that, James. If there is sort of a rush to profit take, it could be quite sharp. What I can say, it's going to be one of two things. It's going to be either a pullback or it's just going to be a stabilization sideways. Which one? I don't know. You know, we're just going to have to see as it comes. But the idea here is until that real rate oversold condition normalizes, there is obviously a risk of pullback, and that pullback may be sharp. It may not be, but just be aware that we are in that oversold territory. All right. Are there any other questions there? Any other questions? All right, let us conclude at this point. Thank you very much. Please join me again tomorrow. Just remember that this will be the last week for 2023 in terms of webinars. Thanks very much, guys.